Welcome back to this deep dive. Today, we're really getting into it.
We are.
One of the, fiercest rivalries in crypto, maybe? The whole XRP versus ETH thing?
The flippening, yeah, it's got a name and everything. Very intense.
It really is. And look, if you're in the space, you see it everywhere. Constant arguments, people predicting huge moves, really complex signals from the market.
Total noise sometimes.
Exactly. So our mission today, cut through that noise. We're going to unpack the main arguments, look at the regulatory situation, which is key,
For sure.
and dig into the market data behind it all. We want you to walk away really understanding the different angles here.
Right. So maybe let's start with defining the flippening itself. What are we actually talking about?
Good point.
Because it's not just like a one-day price jump where XRP overtakes ETH for an hour.
No.
Historically, and definitely in this specific context, it means one asset really establishing, lasting dominance over the other.
Across the board.
Pretty much. Market cap is the big one everyone watches, but it's also about usage, developer activity, and maybe most importantly, like sustained institutional adoption and just cultural weight in Web3.
Okay. And right now, where do things stand?
Well, today, it's pretty clear-cut. Ethereum's the solid number 2, way behind Bitcoin, obviously, but with a huge lead over everything else.
And XRP?
XRP usually hangs around the top 10, but, and this is key, it's known for these incredibly dramatic surges. Real volatility.
Usually tied to news, right?
Yeah, often specific hype cycles, big court decisions, major partnership announcements, that kind of thing. It can move incredibly fast.
It's fascinating because it feels like more than just numbers. It's almost a clash of philosophies for Web3, wouldn't you say?
Absolutely. It forces you, the investor, to think about which path makes more sense long term.
Right. You've got Ethereum, which is the bet on programmable money, DeFi, NFTs, the whole application layer.
The world computer idea.
Exactly. And then XRP is this bet on super efficient, bank-friendly settlement rails, global liquidity.
Two very different visions for where the value is going to be.
So let's dig into the case for each. We'll start with XRP. What's the main argument there?
Okay, so the core case for XRP, the bull case, it seems really focused, right? Utility, getting institutions on board, specifically for cross-border payments.
Exactly. Ripple, the company, their whole strategy is built around fixing how money moves globally.
Which is currently pretty clunky and expensive.
Incredibly so. Think correspondent banking, Nostro Vostro accounts. It's archaic. Ripple wants XRP to basically replace that plumbing for large value transfers.
It's such a specific focus compared to Ethereum, which is trying to be, well, everything.
Right. ETH is building this general-purpose platform. Ripple is aiming straight at the existing financial system, trying to integrate with banks, payment providers, even talking with central banks about CBDCs.
They want to become the standard for moving money fast and cheap between institutions.
That's the goal. And that laser focus is actually what appeals to the traditional finance world. They understand that specific problem. So when we hear about partnerships, like with Santander or SBI in Japan, what's the real significance there? Is it just PR or is it actual usage?
That's the critical question.
Yeah.
And the evidence points towards real integration, particularly with products like on-demand liquidity, or ODL.
Explain ODL quickly.
Sure. ODL lets a bank, say, in the U.S., send dollars that are instantly converted to XRP, set across a network, and then instantly converted to, say, Mexican pesos for payout, all in seconds.
Without needing pre-funded accounts.
Exactly. It avoids tying up huge amounts of capital in foreign currency accounts all over the world, those Nostro Vostro accounts. That's a massive cost-saving and efficiency gain for banks.
So XRP is being used as a tool, a bridge.
Precisely. As a utility for settlement, not just held as a speculative asset. And when you see central banks seriously exploring using the XRP ledger rails for their own digital currency projects, well, that adds another layer of validation for the tech's speed and reliability.
Okay, that utility angle makes sense. But then there's this other, more explosive idea you hear about, the XRP supply shock.
Yes. The big one.
It sounds dramatic. What's the actual theory? How would the supply suddenly disappear and send the price flying?
It really boils down to two main drivers, both connected to that institutional adoption story we were just talking about.
Okay.
First is the operational demand itself. If, hypothetically, the world's top banks actually start using XRP for ODL at scale.
Like serious daily volume.
Yeah, billions, maybe trillions eventually. To handle that, they wouldn't just buy XRP on the open market each time. They'd need to hold significant amounts of XRP in reserve, like operational float, to ensure they have liquidity ready instantly.
So they buy large amounts and just hold it.
Essentially, yes. Locked away in institutional custody, purely for operational needs. Not for trading, not for yield, just to facilitate payments.
And that takes it off the market.
Exactly. Think about it. If even a relatively small percentage of the total XRP supply gets locked up by dozens of major banks for this purpose, the amount left freely circulating for retail, for exchanges, for speculators, it shrinks dramatically.
Creating scarcity.
Potentially extreme scarcity if that adoption thesis plays out. That's the first part of the supply shock theory.
And the second part, you mentioned two drivers.
The second big one, and arguably the catalyst that brought this whole idea back into focus recently, was the outcome of the Ripple versus SEC case.
Right, the court rulings. How did that legal stuff impact supply and demand?
It provided a specific type of legal clarity, which is gold for institutions. The ruling basically said XRP itself is not inherently a security, and importantly, sales of XRP by Ripple on exchanges to the public, programmatic sales, were not investment contracts.
But institutional sales were.
Yes, direct sales from Ripple to institutions were deemed securities offerings. It's a nuanced ruling, but the key part for market dynamics was the green light for programmatic sales.
Why was that so important?
Because it significantly lowered the perceived regulatory risk for U.S.-based crypto exchanges, market makers, and custodians to list, trade, and hold XRP. Compliance departments breathe easier when there's a court ruling, even a complex one.
So easier for regular trading and holding.
And for potential institutional players who need that checkbox of legal clarity before they could even consider touching an asset. For big money, regulatory certainty is often paramount.
Okay, so let's connect the dots. You have potential large-scale buying from institutions for operational needs, locking up supply.
Check.
And then you have improved regulatory clarity in a major market, making it easier and safer for everyone else to buy and hold XRP.
Check.
The combined effect could be a serious demand surge hitting a potentially shrinking available supply.
That's the core of the supply shock argument. The demand driven by utility moving money could suddenly and drastically outstrip the demand for ETH, which is currently driven more by things like gas fees, DeFi speculation, NFT mints, and staking yield.
It's a different kind of demand.
It could be. Less elastic, more tied to fundamental global financial flows rather than crypto market cycles. That regulatory clarity, even with its nuances, is probably XRP's biggest advantage right now.
Especially when you compare it to Ethereum's situation.
Exactly. ETH, despite the ETF approvals, which are huge, we'll get to, that still faces this lingering uncertainty. Questions around staking, centralization of staking providers, whether the whole post-merge system could be viewed as its security.
The SEC hasn't given a definitive all-clear.
Not really.
Okay.
So from a compliance officer's perspective at a big conservative institution, XRP might actually look like the less risky bet in the short term, simply because it has a court ruling defining its status, whereas ETH's status for certain activities is still a bit fuzzy.
Interesting contrast. That difference in clarity could funnel capital towards XRP that might otherwise wait on the sidelines for ETH.
It absolutely could. Billions, potentially.
Okay, this is a good moment to maybe just pause for a second. Before we dive into Ethereum's side of this, I just wanted to say we've seen a massive increase in comments, likes, all that good stuff recently.
Yeah, the engagement's been great.
It really has, and honestly, thank you. When you take a moment to hit like, subscribe if you haven't, maybe drop a comment, it genuinely helps the channel a lot. It tells the algorithm people are finding this useful.
Helps us keep doing these deep dives.
Exactly. It supports us in bringing you this kind of content on Bitcoin, Ethereum, XRP, the whole Web3 space. So yeah, thanks again. It makes a real difference.
Definitely appreciate it.
All right, so we've laid out the XRP case utility, partnerships, potential supply shock, regulatory edge. Now let's flip the script. Let's talk about Ethereum. It holds that #2 spot for very, very good reasons. If XRP is like building a super fast specialized train line.
Ethereum's building the entire national rail network, maybe the roads and airports too.
Yeah, that's a good analogy. Its dominance across the whole Web3 landscape is just undeniable.
Foundational.
Right. We're talking DeFi, decentralized finance, locking up billions in value for lending, borrowing, trading.
A core of open finance right now.
Then you've got NFTs, the whole digital, collectible, and art market, primarily built on ETH, smart contracts underpinning everything from DAOs to potentially supply chains.
The programmability is key.
And critically, addressing that speed and cost issue, people raise the explosion of layer 2s. Arbitrum, Optimism, ZK Sync, Starknet, all built on top of Ethereum to scale it up.
That whole ecosystem creates this incredibly powerful network effect. It's maybe ETH's biggest advantage.
Define network effect in this context.
It just means the platform becomes more valuable as more people use it. With Ethereum, you have literally thousands of different projects, protocols, developer teams.
All building on ETH.
Yes, investing their time, their capital, their brain power into the Ethereum virtual machine, EVM, the Solidity programming language, the tooling, the infrastructure. There's this massive shared knowledge base and user base.
So it's hard for projects to leave.
Extremely hard.
Yeah.
The switching costs are enormous. Why would a successful DeFi protocol with billions locked and a huge user base just pack up and move to another chain, maybe offering slightly faster transactions?
They'd lose the liquidity, the users.
The composability with other ETH projects, the established security audits, the developer familiarity. Even if XRP is technically faster or cheaper for simple payment, the entire economic zone is on Ethereum. It's the default settlement layer for the digital asset world itself. That's a really powerful position.
Okay, but let me push back a little there. If speed and cost are really the absolute priorities, especially for the traditional finance world XRP is targeting,
Yeah.
does that huge ecosystem matter if the base layer is still perceived as slower or more expensive, even with layer 2s adding complexity? Do layer 2s truly solve that core issue for institutions?
That's a really important question. And the way layer 2s work is crucial here. They aren't just simple speed upgrades, they're fundamental scaling solutions.
How so?
Well, things like rollups, optimistic, or zero knowledge. They bundle hundreds or thousands of transactions together off-chain, process them super fast and cheap,
Okay.
and then they post just a small compressed proof or summary of those transactions back to the main Ethereum blockchain.
So the security still comes from Ethereum.
Exactly. You inherit the decentralization and security of the main Ethereum network, but you get throughput that can rival or even exceed traditional payment systems, thousands of transactions per second.
While still allowing for complex smart contracts.
Yes, that's the key difference.
Yes.
It scales programmable transactions, not just simple value transfers. It offers a much more flexible and robust architecture for building complex financial applications compared to a single-purpose payment chain.
So the argument is layer 2s give ETH speed and retain its programmability and security advantage.
That's the core idea. It addresses the main critique while keeping the ecosystem intact.
Makes sense. Beyond the tech and ecosystem, though, there's the institutional trust factor. Ethereum seems to have gained significant ground there, especially recently.
Absolutely. The approver of spot Ethereum ETFs in the US in 2024 was a landmark moment, maybe even more significant than the Bitcoin ETFs in some ways.
Why more significant?
Because it wasn't just about price exposure. It signaled regulatory acceptance, or at least tolerance, of ETH's staking mechanism and its role as a productive asset, not just a digital commodity like Bitcoin.
And it opened the door for traditional investors.
Massively. Think pension funds, endowments, registered investment advisors, people managing trillions of dollars who can now allocate to ETH through a familiar regulated wrapper like an ETF.
So it's different from the XRP court ruling.
Very different. The ETF provides a regulated investment vehicle. It allows passive, large-scale capital allocation. It integrates ETH into traditional portfolio models. The XRP ruling provided operational clarity for using the asset. Both important, but the ETF arguably provides a much larger, more stable source of potential demand.
It ties ETH's value more closely to traditional market flows.
You could say that. It creates a potential long-term institutional bid for ETH that's less dependent on specific utility adoption narratives and more on broad asset allocation trends.
And this institutional comfort isn't just about the ETF, right? There's other infrastructure.
Definitely. The Ethereum staking infrastructure, for example, is becoming quite mature. Major custodians and financial institutions are offering regulated ETH staking services, allowing institutions to earn yield on their holdings. That aligns well with traditional finance models.
Plus enterprise adoption.
Yeah, you see many Fortune 500 companies experimenting with blockchain, often using private or consortium versions of Ethereum through things like the Enterprise Ethereum Alliance. They default to ETH's tech stack for complex business logic, even if it's not on the public mainnet. It just reinforces ETH's position as the standard platform.
So if you're listening and trying to track this whole debate using data, not just headlines,
Yeah.
what should you be looking at beyond price?
Great question. Price is just one piece. You need to dig into on-chain metrics that reflect actual usage and network health.
Like what?
Okay, 3 things maybe. First, compare Ethereum's smart contract activity. Look at total value locked, TVL, in DeFi protocols, the number of active smart contracts, the amount of gas being spent indicating real demand for block space. Compare that to the value transferred on the XRP ledger.
Right.
Not TVL, but actual payment volume. Are complex apps generating fees, or are simple transfers dominating?
Okay, DeFi activity versus payment volume. What else?
Second, look at the supply dynamics. Ethereum has EIP 1559, which burns a portion of transaction fees. When network activity is high, this can actually make ETH deflationary. The supply decreases. That's a unique value proposition.
So track the net issuance.
Exactly. See if more ETH is being burned than issued. XRP, on the other hand, relies on demand for the token itself and very low transaction fees. Its supply isn't inherently deflationary based on usage in the same way.
And the third thing?
Developer activity. This is huge. Track contributions to open source code repositories like GitHub. Look at the number of active developers building on each platform.
Why is that important?
Because a thriving ecosystem needs constant innovation. XRP is a finished product, largely. Highly functional, but its development is focused. Ethereum aims to be a platform for future innovation. If you see developer counts and active addresses on ETH continuing to climb rapidly, it suggests its network effect is strengthening, its moat is getting wider. That's a powerful long-term indicator.
We absolutely have to come back to the regulatory picture, though, because it's honestly the biggest wild card. It could change everything overnight.
Yeah, we touched on it. XRP got that partial win.
Right. Clarity on programmatic sales, which helped exchanges and reduced some institutional fear in the U.S.
But not a total victory.
No, and that's crucial. The SEC still views Ripple's direct sales to institutions as illegal securities offerings. So there's still some legal overhang, especially for those early institutional buyers.
Okay, so XRP, partial clarity, some remaining risk. What about ETH?
ETH has the ETF, which is a massive implicit nod from regulators, at least for the asset itself. But there's still this cloud around staking.
The centralization issue. Partly that, and partly whether offering staking services, especially through large centralized providers like exchanges or custodians, constitutes an investment contract under the Halley test. Is there an expectation of profit derived from the efforts of others?
The SEC hasn't ruled definitively on that.
No. And they could still bring enforcement actions against major staking providers, which could cause significant disruption or force changes to how staking works.
So it's like XRP has a defined, partially resolved legal risk, while ETH has a potentially larger but undefined ongoing regulatory risk related to its core consensus mechanism.
That's a pretty good way to put it. And that lack of complete operational clarity for ETH staking is the opening XRP bulls point to. Any negative regulatory action against ETH staking could send capital looking for safer havens.
Which brings us to history, because this whole flippening idea isn't new, is it? Has XRP ever actually overtaken ETH?
Briefly, yes. You have to go back to the mania of late 2017, early 2018.
The huge altcoin bubble.
Exactly. It was wild, fueled by pure retail speculation, ICO madness, and honestly, some pretty thin partnership announcements that got blown way out of proportion.
And XRP surged.
Massively.
Yes.
For a short period, maybe a few days or weeks, depending on how you measure, XRP's market cap did actually exceed Ethereum's.
Wow, so it has happened before.
It has. It showed that with enough hype, enough retail FOMO, and a compelling narrative back then, it was all about the banks are going to use XRP tomorrow. You absolutely can see these dramatic shifts in market cap, even if they don't last.
What's different now compared to 2017?
Right.
Why didn't that flippening stick?
That's the key question. The 2017 pump was almost entirely driven by narrative and speculation about future adoption. It wasn't based on significant current utility or deep institutional integration.
Whereas the ETH ETF.
The ETH ETF represents structural adoption. It's regulated institutions allocating real capital through established financial products. It's less about hype and more about portfolio diversification and long-term bets on the technology.
So fundamental growth versus speculative frenzy.
Largely, yes. The ETF provides a much stickier, more sustainable base of demand for ETH compared to the retail-driven surge XRP saw in 2017. We're comparing real infrastructure build-out versus speculation on future use cases.
And you can't talk about this rivalry without mentioning the communities, right? The online battles.
Oh, absolutely. The XRP army versus the ETH maximalists. It's intense.
How much does that social media sentiment actually matter?
At the retail level, quite a bit, especially for XRP. If you track social media mentions of flippening or specific pro-XRP narratives, you often see spikes correlating with price volatility.
So the narrative itself drives price.
It can certainly amplify moves. The belief within the XRP community about imminent bank adoption, the regulatory clarity narrative, it's powerful. This collective enthusiasm, the shared story, creates buying pressure. Especially in retail-driven markets, it adds a whole psychological dimension to the competition. So zooming out, why should anyone actually care about this? If XRP flips ETH or ETH pulls further away, what does it really mean for the market for you as an investor?
Yeah, what are the stakes?
Well, a real sustained flippening would be a massive psychological shock to the entire crypto market. It wouldn't just be numbers changing. It would signal a huge shift in what the market values most,
A rotation of
a
capital.
decisive one. It would suggest that the market, collectively, is betting more heavily on that specific institutionally focused settlement utility offered by XRP, rather than the broad, decentralized application platform vision of Ethereum.
And that changes how people invest.
It has to. If you're building a diversified crypto portfolio for the next cycle, it forces a really fundamental choice. Are you betting primarily on the asset designed to grease the wheels of global finance?
The XRP thesis.
Or are you betting on the foundational layer for potentially thousands of new, decentralized applications and financial primitives?
The ETH thesis.
It makes you pick a lane, in a way. Which utility path do you believe will capture the most value long-term?
So it comes down to that core conflict again. The war of narratives.
Yeah.
Settlement rails versus programmable finance.
Exactly. Is the future value in making the existing financial system slightly more efficient, XRP's goal, or is it in building a fundamentally new open financial system, ETH's potential?
And the way each asset captures value is totally different too.
Completely. XRP's value, theoretically, should stem from demand for the token itself to facilitate payments. Banks needing it for operational float, transaction volume, driving some baseline demand.
Low fees, though.
Very low fees. The value is more about holding the asset for liquidity. ETH, on the other hand, captures value through gas fees paying for computation on the network and through staking yield, locking up ETH to secure the network. Plus, that potential deflationary pressure from EIP 1559.
Demand for block space and security.
Right. It's a different economic model entirely.
So how can people track this unfolding conflict beyond just the price charts?
Look at the relative performance over time. Watch the ETH XRP market cap ratio. Does it narrow significantly during XRP news events? Does it widen during major ETH ecosystem developments like Layer 2 milestones?
Look for how the market reacts to specific catalysts for each asset.
Precisely. And also, watch the plumbing of the market itself, the exchanges. How do major global exchanges prioritize trading pairs and liquidity?
Meaning?
ETH pairs, ETHIST, ETH, BTC, Ether, are usually dominant, reflecting its broad use and institutional footing via ETFs. Really strong signal for XRP adoption would be seeing major exchanges outside the US, maybe in Asia or Europe, start prioritizing XRP fiat pairs, offering deep liquidity. That would indicate real global financial integration, not just US-centric speculation.
It would show banks and payment providers globally are actually using it at scale.
Exactly. It's about following the institutional money and the infrastructure being built around each asset globally.
Ultimately, then, it forces you, the listener, to decide which narrative seems more likely to attract sustained large-scale capital over the next 5-10 years. Is it XRP integrating deeply with traditional finance? Or ETH powering a new wave of decentralized innovation?
That's the billion, maybe trillion-dollar question you need to grapple with. #HagOutro.
Well, that brings us to the end of this deep dive into the very charged rivalry between XRP and Ethereum.
Quite the battleground.
It really is. And both sides, you have to admit, have strong arguments. XRP with its clear focus on payments, the regulatory win, the institutional partnerships.
A very targeted and a potentially disruptive play within the existing system.
And then Ethereum with its massive ecosystem, the undeniable network effects, the developer mindshare, and now, crucially, that institutional stamp of approval via the ETFs.
The incumbent platform, constantly evolving.
Our goal here wasn't to pick a winner, obviously, but to really lay out the facts, the connections, the different ways of looking at this intense competition.
Hopefully giving you the tools and the context to analyze it yourself. Knowing what signals to watch regulation, L2 progress, real adoption metrics, not just price as this whole debate continues to unfold.
Exactly.
And maybe, as a final thought to leave you with, consider this scenario. Let's imagine XRP does see massive institutional uptake for payments. Its price pushes significantly higher, maybe, say, $10, based purely on that utility.
Okay, a hypothetical success story for XRP's model.
Right. At that point, does traditional finance, now heavily using XRP rails, look at Ethereum's DeFi ecosystem with all its complexity, its smart contract risks, its sometimes murky regulatory status, and see it as an unnecessary risk? Could we see a massive rotation out of ETH into the perceived safety and simplicity of XRP? Or is Ethereum's network effect, its sheer scale, is the foundation for thousands of applications, just too vast, too integrated into the future of the internet to ever truly be flipped or abandoned, regardless of XRP's success in its specific niche?
Is ETH too big to fail, essentially?
That's the big question about structural dominance in the long run, something
Yeah.
to think about.